What I'm about to teach you in this video was never supposed to be publicly released. This is from my upcoming course update, and I promise you what I'm about to teach you, no one has ever taught before. This is my own concept, and it uses ICT, it mixes up ICT and my concepts together. And this is something that I've been working on for so long, and I've finally figured out how it works. Okay, this video is literally gonna change the way you trade and the way you trade the markets. Now, before I start, I want to give you guys some background information about myself. If you are a new person watching this video, I am a six-figure funded trader managing 4 prop firms account at the moment, and I have already passed the phase 1 of my 5th challenge, and it was documented on Twitter with every single trade. Now, I have helped hundreds of students get funded and get their first payouts. All right, so rest assured, you are learning from someone who actually knows shit about trading. All right, so this is going to be a long video. It could be short, but if this is a long video and you have an attention span of 3 seconds because you watch TikTok, I want you to leave the video right now, because trading is not for you. If you cannot stick till the end, trading is literally not for you. So without wasting any more time, right, let's get on with the video. So what exactly I'm about to teach you is you can basically predict the expansion of London session and New York session with 80% accuracy. You will know where the London session will push the price to, and you will also know where the New York session is going to push the price to. And I will also teach you entry models to use with this technique. Okay, so here is the strategy, here's the entire model, here's the entire concept that I've been working on for so long, and no one has talked about this before on YouTube or anywhere else. And I'm giving it away for absolutely free. This is supposed to be private, but this one video is for you guys, okay? So the number one thing is that you have to mark out the Asian session range high and the Asian session range low. So the Asian range starts from this New York time, okay, and it ends at 2 a.m. New York time. Now, the actual Asian range ends at midnight, okay, midnight, which is 12 a.m. But for this strategy, we're going to use the 2 a.m. for our closing time for Asian range. So this is basically 2 a.m. Okay, so the very first thing that you have to do is you have to mark out the Asian range low, right? So let's assume that this is the Asian range low. And let me remove this. So this is the Asian range, right? This is the Asian range low, and this is the Asian range high. You have to watch very carefully, okay? Now, let's assume that price takes out the Asian range low after 2 a.m., okay? So at 2 a.m., the Asian range is completed, and then we mark out the Asian low and Asian high. Now, let's suppose that price after 2 a.m. takes out Asian range low. Now, what it does, it sets the bias for London and New York session, but it's not that simple. Hear me out. Now, what's going to happen is price have to take out Asian high as well. So first, we took out the Asian range low. That confirms that our overall bias for the rest of the day is going to be bearish. Now, after this happens, we need to see the Asian high taken out as well. Okay? The Asian low was taken first. That sets the bias. We are not looking for anything at the moment. We are waiting for price to also take out the Asian high, and that happens right here. Now, once that happens, guys, we need to see price close below on the 15-minute time. So this entire strategy is on 15-minute time frame, okay? This is the time frame for this strategy. So once that happens and we see acceptance back into the range, we ideally want to see a market structure shift somewhere around here on the 15-minute time frame. Now, once you get the market structure shift, you are simply taking your entry and you're targeting this level around here. this low. Okay, so we had the purge of the Asian low, right? And afterwards, we had price take out the Asian high as well. Now we have a purge of the low and purge of the high. But since the Asian low was purged first, this is going to be the original direction of the, the entire day. And if I flip the chart over, let's assume that the Asian session high was taken out first. Okay, so let me just do this. Okay, so the Asian high was taken out first. Now what that does, it sets the bias for the rest of the day to be bullish. But first, to establish that bias, we need to also see the Asian low taken out. So that's basically two liquidity sweeps. First, the Asian high is taken, and then the Asian low is taken. If the Asian high is taken first, then our bias is going to be bullish for the rest of the day after Asian low is also taken out. Now, once the Asian low is taken out, we look for a market structure shift and we look to take our entry. Now, in most cases, what's going to happen is, let's assume you do not get a there's no proper structure in this leg, and you do not get a market structure shift. There are times when price is going to double sweep the Asian low. So we're going to have sweep one, price will push up, and then it's going to sweep the low once again. Okay, this is going to happen a lot of times. So if you do not want to look for market structure shifts, you have to look for this pattern where price takes out the Asian low, and then pushes back up, goes back into a range, triggering early buyers into thinking that price is not going to reverse. But then price is also one more time going to sweep this low. And then we look for a acceptance back into the range, and we look to take our entry on the retest. Now this is when you don't get a market structure shift. Okay, and then you can target this high over here. And similarly, that will look the same when you are looking for short positions. So to summarize, if the Asian low is taken out first, right, the overall bias for the rest of the day is going to be bearish. And we established that bias after the Asian high is also taken out. And similarly, if the Asian high is taken out first, the overall bias for the rest of the day is going to be bullish. But to establish that bias, we have to also see the Asian low taken out as well. And this is the entry model. We either see a market structure shift and acceptance back into the range. So you cannot look for a market structure shift anywhere, okay? Because price is going to push down like that. But this is not valid. We need to see price come back into the range, and then we can look to take our entry. So now that I've explained the entire strategy, let me give you guys some examples so you basically understand the entire model. And before I move to the examples, I want to make this very clear. This works really, really well with indices, and I primarily use this model with indices only. But this works on Forex and gold as well. But please, I highly suggest, if you want to see insane results, just stick to NAS 100. Or any index. It could be US 30, it could be S&P 500. So now let me give you guys some examples. All right, everyone. So here is example 1. And I use an indicator called FXN, Asian Session Range. And if I just go here to the settings, right, I have the labels and lines disabled. So the Asian range starts from here till 2 a.m. So you got to wait for the 2 a.m. candle to close. Now that is your Asian range low. And we are on the 15-minute time frame. So this is the Asian range low. And this is the Asian range high. So let's see which level is taken out first, the Asian low or Asian high. So in this example, you can see the Asian low was taken out first. Now, our overall bias for the rest of the day is bearish. But to establish that bias, we need to see the Asian high taken out as well. So the price goes down. And over here, you can see that we took out Asian high as well. Now for the rest of the day and for the PM session as well, price is going to go down and it's going to take out this low. So we ideally want to see a market structure shift or a double sweep pattern. And the double sweep pattern happens right here, where we have first price take out the high, then we have a reclaim, forcing a lot of sellers into selling, but then what happens? Price goes up because we didn't have a market structure shift. And now finally we are waiting for price to close below the range, and that's here. Now simply just take a short position, stop right above the high, and you target this level right here. Okay, so what exactly happened? We took out Asian low that set the bias for a later New York session and the PM session, right? And we saw a double sweep over here because we didn't have a market structure. So now our entry will be on the retest. We got our entry, and you're gonna see that price delivered beautifully to this level during the PM session. Okay, so yeah, that's a beautiful example. Let's move on to another example. All right, guys, so here is example number 2. So you can see this is 2 a.m. The candle closes on the 15-minute time frame. So this becomes our Asian range high, and you can see the Asian range started from 8 p.m. right, and then you're gonna mark out the Asian range low. So now let's see which one is taken out first, the Asian high or the Asian low. And you can see the Asian low is taken out first. So our overall bias for the rest of the day is bearish. So now let's see what happens. We want to see the Asian high taken out as well now. We cannot go short right now. And just around here, we got our short position. And notice what we had. We had a double sweep, right? So if price takes out the liquidity, then pushes back below, then we have another sweep, and then we can take our entry on the retest. But let's see what happens. Now notice what happened here. We also have a market structure shift, and we have this fair value gap just around here, and our draw on liquidity is still intact. So you're gonna see what happens. Price taps to the retest point, it also goes into the fair value gap, and you're gonna see what happens next. Price hit the take profit level. Now when this setup forms, you're gonna see price instantly move towards this level. Okay, now you can actually go break even once 1 to 2 or 1 to 1.5 is hit to be on the safe side, but rest assured it's gonna go most of the time towards this target. So very simple, guys. The Asian low was taken first, that set the bias, and afterwards the Asian high was taken out, and then we look for either a double sweep pattern, and we look for double sweep pattern after a sweep happens. So you see the price took this level out, right? And then the price pushed back into the range. A lot of people would sell right here, but we want to see another purge unless price sweeps this level, and then we instantly get a market structure shift. Then we can take a shot, but usually you want to see double purge. 1, push back, push 2, market structure shift, entry, or even if you don't get a market structure shift, close below the range, retest, entry, target this level. Let's move on to another example. Okay, guys, so here is the last example. So you can see that we have the Asian range high, and at 2, right, when the candle closes, you mark that as the Asian low. So this is the lowest point, this is the highest point of Asian range. Now let's see what happens. So the Asian range low is taken out first, so our overall bias is going to be bearish after price now takes out the Asian high as well. So you can see that price took out the Asian range high. Now let's see what happens. Over here you can also see we have a double sweep pattern. So after price took out the Asian high, after taking out the Asian low, so the Asian low set, once the Asian low was taken out, we were waiting for price to take out the Asian high. But then also during this price action, price had a double sweep. So now we are simply waiting for price to close back below the range. And still not happening. Right here, you can see we closed below here. We don't have a market structure shift, right? But what happened? We had a double sweep, pushed back up. This is the first push. We then created a high, which is very important. and then we had another sweep, and then we closed below the range. Now our target is here. This is our draw on liquidity. So short position just right here, stop right above the high, and we target this level. So let's see how this plays out. So right here we got the tap, and price pushed back below, hitting our take profit level. And yes, it went further down to some form of, liquidity level around here, but primarily want to target this level here because this is the safest. So this is the entire model, guys. This was not supposed to be publicly released. In the future, I may create more videos on this, but this is literally all you need for now. Go backtest, forward test, and see how this works out for you. And if it does work for you, please hit the subscribe button. We're just gonna hit 100K, and that would be perfect. So thank you so much for watching. See you guys in the next one.